Hello again, traders. Dwayne here from DRFX, Forex and Trading. Going to be showing you another example of how we can use candlestick patterns to accurately predict what is going to be taking place on the currency market without the need to use complicated statistical indicators. Now, this example took place on the Kiwi dollar over the weekend, where the daily chart provided a setup that indicated that we could be forming a double bottom formation just below this pennant setup that had been formed on the daily chart. As you can see here, the market initially attempted to start a breakout bearish in favor of the US dollar, but instead of continuing lower, the market started to move sideways and pull back, and the shape and the nature of the candles appear to indicate that we could be forming a double bottom formation with an additional bull candle needed here to complete the formation of that setup. And as you know, when it comes to consolidations, double bottoms or double tops formed just outside of the boundary are a very strong and common indicator that the market will start a reversal that would take us back inside of the consolidation. So this was one element, or this was one aspect that supported the possibility that the market was going to be forming a double bottom formation just below the support boundary here. Another aspect that supported the possibility of the formation of a double bottom on the daily chart was the fact that here on the 4-hour chart, the market has provided bullish and bearish waves and this recent bull signal to indicate that the market was going to be forming a pennant setup on this time frame. So the expectation was that the market was going to respond to this bullish signal by creating another bullish wave that would take us towards this area here before U-turning to provide another bearish wave, and in so doing it would create a second resistance point to allow us to complete this resistance boundary that would complement the support boundary that would be formed by the rally that would take place here. So these two elements, the possibility of a rally on a 4-hour chart that would form a pennant, and which of course would lead to the double bottom formation on the daily chart, essentially supported the forecast that the market was going to be rallying in favor of the New Zealand dollar between Friday, May 5th and Monday, May 8th. And as you can see from this live picture of what is taking place now on this time frame, this is exactly what has taken place. The market did rally and did form this double bottom formation, and on a 4-hour chart you can see the rally that took place in response to this bull candle as the market rallied, pulled back a little bit just below at the support boundary of the larger pennant before U-turning to rally towards the area that we had expected the market to head towards. And as you can now see, the market has now pulled back to start what is expected to be another bearish wave that would complete the formation of the consolidation setup. So this is a typical example of how we can use candlestick patterns to accurately predict what is going to be taking place on the currency market, especially when we use these on the daily and 4-hour charts, where the patterns are a lot more reliable, and you don't have to deal with a lot of false signals that tend to be associated with the smaller time frames. So without the use of statistical indicators, we can identify the patterns that are taking place on the currency market and use them to predict what is going to be taking place over the next several hours or several days, and take advantage of it by trading them and capturing strong trading gains before the market reverses. So in summary, as I said before, double bottoms are very common patterns that are formed just outside of consolidations, especially when the market is indicating that it is struggling to continue the breakout that started. Double bottoms can be formed, and these double bottoms are also associated with significant currency movement and are very common when it comes to consolidations because they tend to be associated with the start of false breakout reversals. similar to ABC signals and small consolidation breakouts that take us back inside with consolidation. And of course, predicting the formation of pennants can be done when you apply the fact that, when you use the fact that these types of consolidation setups tend to give us a heads up that they're going to be formed by the fact that there are certain types of waves that generally indicate that the market is going to be forming these types of setups. So once we're able to predict, once we're able to identify that the market is, once we're able to identify these waves of candles, these waves of bullish and bearish movements, we can predict the formation of consolidations and take advantage of them by trading these waves, so long as the signals that start them are strong and provide us with a strong trading opportunity to take advantage of them.